As Bitcoin's range tightens, offside longs, that is, puked on last evening's Darth Maul candle. Meanwhile, this morning, the World Bank came out with a prediction that pretty dramatic global GDP is going to tighten. Nations are teaming up against India, it seems. Bitcoin investment looks attractive in the United States, and much, much more we're going to cover on today's exciting episode of Breaking Bitcoin.
Hi everyone, my name is Simon Yu. I'm the CEO and co-founder of Storm, and you're watching Breaking Bitcoin.
All right, guys, welcome back to Breaking Bitcoin. This is your daily source for everything cryptocurrency markets and personal finance. Hopefully, everyone is doing fantastic today, wherever you happen to be and however you are tuning into us this afternoon. We've got a fantastic show for you guys today, so much that we're going to cover. Before we begin, today's show is brought to you by the Kraken Cryptocurrency Premium Trading Group. And with everything that's going on, there has never been a better time to learn how to navigate the financial markets. Whether you're interested in cryptocurrency, Forex, stocks, or derivatives, the Premium Trading Group has you covered. You can join our community of professional traders and learn how to build your own objective, data-driven strategy. If you're tired of trading with your gut, watching poor discipline and trade management sap away your progress, make the change and join us at premium.krakencryptocurrency.com. That's premium.krakencryptocurrency.com. Links in the description. All right, we've got so much to talk about today, guys. So much to talk about. World Bank came out this morning saying they're seeing global GDP contraction of about 5.2%, kind of waving a false, I don't want to say false flag. That's going to get I already said it. Video's already flagged. But in the face of kind of the rising positive sentiment of nations going back online, pulling back COVID restrictions. Meanwhile, we could talk about India, but there is some stuff going on over there. Basically, the INR has been doing okay lately. And now, just this morning, kind of came out of the nowhere for me anyways, nations really teaming up against the INR, talking about how their economy is going to take such a huge hit moving forward. They're going to have a second wave of the pandemic, et cetera, et cetera, et cetera. But we've also got some things to talk about in the realm of cryptocurrency, in the realm of DeFi, and we're going to go over the latest institutional investor survey from Fidelity and overall just talk about that growing trend of institutional increase or interest in cryptocurrency, which is kind of right along there with the premiums that we see on the Ethereum, on the Grayscale trusts like GBTC and ETHE. Still large premiums on those, showing that institutional investors or large net worth individuals are certainly willing to pay that premium to get in, just as individuals are willing to pay the premium on physical gold and physical silver to hold that, not as a growth investment really, although some individuals are of course investing in gold and silver for that growth potential, just as they invest in cryptocurrency, but more as a store of value, a way to hedge against inflation. And with, I kind of want to bring to light, obviously, I just saw this, I think Bloomberg just covered this morning. I was reading this morning. But this is becoming a real reality. Mainstream media is beginning to talk about this, and this is going to be a trend. This is accelerating faster than most individuals think that it's happening. With China's DCEP, with China's digital currency, right? This is going to threaten the dominance of the United States dollar worldwide as a world reserve currency. And we've already been on this dollar standard unbacked by anything since the end of Bretton Woods for about 40 years. And a little bit over that, actually. And, the switch that we're going to see and the inflation that we're currently seeing globally. We've never seen global inflation of currency supplies. This, really it's accelerating quite quickly toward a period where we're going to see a lot of instability, in my opinion. And that desire, that necessity to hold some store of value that's not in people, it's a misnomer. People say cold hard cash, right? But it's really soft cash, right? Currency is soft. It does not hold its value. This is why we see inflation of the asset prices, because assets, stocks, corporate stocks, common stocks, and preferred stocks, they are more valuable to hold in cash. Gold and silver are more valuable to hold in cash. Cryptocurrency is more valuable to hold in cash, at least the good ones, Bitcoin, Ethereum. And this is a trend that's accelerating really, really quickly. And I think people need to not think that they, of course, like, things can go on for quite a long time. The current situation has gone on a long time. But that impetus, that desire, that necessity to begin moving or diversifying into funds, we're beginning to see it accelerate. And For those of you watching this channel, you're well positioned. You're obviously already in cryptocurrency or interested in cryptocurrency, which is very good. But we're going to start seeing this bigger and bigger wave, particularly as China begins to push with the DCEP and other nations around the world begin to push with their digital dollars, with their digital currencies. This is going to change things fundamentally as we know it, which is why we've been talking about that, at least, focusing on that concept, CBDCs, on this channel for quite a long time. But with that being said, let's jump into the show. If you guys are new to the channel, make sure to subscribe to this YouTube channel. Give us a follow or a subscription if you're watching on Twitch or DLive. We highly appreciate the support over there. And if you guys have any questions, put them in the live chat. Let's see if we can get to 50 likes before we even get into the news. Let's get going, guys. We find ourselves in the live scene once again. And before we start breaking down price action, because price action, we could talk a whole lot about price action. And here's the thing. I'm not going to focus on it too much. Whenever we get into these really tight compression ranges, you see these wild predictions from everybody. Longs offside, shorts offside, liquidation prices, net shorts, net longs, all of these kind of data points that people point to when we are certainly range trading. And it's just one of those areas, right, where range scalping techniques are working quite well, and particularly those who are playing the range horizontal resistance and range horizontal support, and looking at lower time frame signals. Time transformation has been generating very good signals in the lower time frame. For example, I know individuals in the group that are utilizing that as a scalping method in conjunction with some other tools that they've learned throughout, just from their own experience or from the group. But we're still in an area where daily long swings are off limits. And so we're certainly waiting for that area of market confirmation. So we'll get to that here in just a little bit. Let's cover some notable mentions in the news before we get to that, though. In the realm of DeFi markets are making a bit of a comeback. Also, obviously, we saw a kind of drain in their liquidity. I think, honestly, my opinion is that the interest in staking Ethereum is going to pull away from the money flowing into DeFi. However, we do kind of have to correlate that with the idea of retail money flowing into cryptocurrency in general, and obviously Ethereum moving for this Ethereum 2.0 staking change, which is going to still is generating a lot of fundamental interest for investors. But DeFi markets are back above $1 billion in total value locked in decentralized finance smart contracts. Obviously, I believe the surge in Ethereum's price was instrumental in this. So this is like lagging data. This isn't new. This didn't just happen this morning. And Ethereum locked up represents 2.43% of the total supply. So certainly offsides there. A lot of tokens locked up for these decentralized finance protocols. Now, obviously, we've been talking about mining difficulty adjustment. Yesterday, we went over, the on-chain analytics data from Glassnodes, talking about how miners have, if we look at the kind of miner outflow, which is a new metric that Glassnodes just recently added, we can see that miners are not selling Bitcoin at these price levels in large numbers. Right, we're seeing some of the lowest levels in miner sell flows that we've seen in quite a while. At the same time, when Bitcoin deposited on exchange has been in a clear trend of evacuating exchanges and moving into cold storage, which is generally quite a bullish sign. Individuals deposit Bitcoin onto exchanges in order to sell them. And when they withdraw, they are doing things with them. Generally, that money is going to be held for quite a while. Either they're withdrawing to other exchanges or other mediums to trade with them. But more often than not, the larger swath of the population involved in Bitcoin are buy and holders, right? They might invest in some other currencies, but active traders do represent a smaller population of the Bitcoin a smaller portion of the Bitcoin population. So, the idea that the majority of these funds are just going into like altcoin season, that certainly is helping and exacerbating that trend as altcoins continue to perform well, particularly low sat and low cap coins today. Shitcoin perp is up quite a bit, as Alex pointed out to me this morning. However, we are not seeing this massive miner capitulation. We are seeing miners, if they are mining unprofitably, we are seeing them continue to do that and hodl their Bitcoin in reserve. So that means that that profitable miners are holding on and not selling at these price levels, whereas unprofitable miners are quickly running out, or have run out essentially, of Bitcoin to sell. So kind of the fears of this catalyzing capitulation of price is not there. I saw that the creator of the hash ribbons indicator tweeted this morning that we are likely a week to 2 weeks away from the hash ribbons buy signal, which generally comes about once a year, which is generally a long-term fundamental buy-in sign. Of course, the Puel multiple remains in the range where it is indicating that long-term accumulation of Bitcoin at these price levels is good for the next year or longer. So this all points to fundamentally bullish price appreciation moving forward in the long term. Now, the last two difficulty adjustments post-halving, of course, dropped difficulty substantially, right? However, a big influx of hash power has resulted in sub 10-minute block times over the past few days. So we have seen, due to previous difficulty adjustments, obviously the post-halving difficulty adjusted down twice. And we saw hash rate drop off. Not massively so, but we did see a pretty significant decline in hash rate. Hash rate has now surged back into the network over the last few days. The mempool has been cleared out. Fees are down 84% since that spike in fees for the post-halving. So, we always get this. Immediately post-halving, individuals were commenting that hash rate was going down. Individuals are commenting that the mempool was now congested. Fees were up so exponentially. And that has all been cleared away because Bitcoin is a dynamic network. It adjusted down. We have new miners back in. Miners are turning their machines back on. Now, we are seeing a steep adjustment of maybe potentially up 18%, right? So more difficulty is incoming for an estimated June 16th difficulty adjustment, right? And that, while healthy for the network, could mean a squeeze on certain miners. So we'll keep you updated on that moving forward. All right. Now, obviously, I'm sure you guys saw this in the news. Of course, Bitcoin is maturing as an asset class. Nobody can deny this. And I don't know if you guys, how long you guys have been around, but, you go back to, 2017, 2018, even like 2019, right? The institutions are coming. Like this was the narrative that kept price. Well, I don't want to say price flow. This is just the narrative that was kind of sown for the last few years. And, it's always funny to me. It seems to happen like people jump the fence off of a position narrative that they've held and profligated about for years sometimes, like right at the moment when the turning point happens, right? This always like, right, individuals will like dollar cost average down into a long position and, yell at the sky about how this particular chart is bullish. And then like right at the moment of max pain is when they puke their position. And this isn't really uncommon. You learn this as a trader, you learn this about human psychology, that it's at that moment of max pain where you are most likely to do the wrong thing in regards to your investments or your trades. However, after these kind of years of hope from the community at large, institutional investors are taking notice, and we really cannot ignore the volume anymore. We now have, the objective data that shows that all this, the institutions are coming narrative is really true, right? Adding credence, we've seen this growing trend of rising open interest and volume on the CME, right? Bitcoin futures and Bitcoin options. Bitcoin options actually traded with more volume, but open interest on CME futures is fast approaching BitMEX, right? We've seen BitMEX really be left out in the cold since the March meltdown. Okay, you guys will remember this. This is when we had this massive crash in cryptocurrency prices back in March, and BitMEX's liquidation engine went haywire because there was just not enough buy-side liquidity, and mathematically it would have chunked, would have chewed price all the way down to zero. BitMEX chose to to turn off the liquidation engine, to shut their exchange off manually. They have claimed that this was a botnet attack. That is potentially true. However, I firmly believe that they shut the exchange down manually. If it was a botnet attack, then it was a saving grace for price. You can see this by how low price went and how absolutely irrational the exchange interface, due to from reports on BitMEX went as soon as BitMEX price of Bitcoin XBT USD went below $5,000. And you can correlate this with the price as the lows that price reached on other exchanges as well as the CME futures to see really where the buy side liquidity was in the spot markets, where buyers certainly had enough liquidity to prevent price from going that low. However, the BitMEX liquidation engine just continued to chew price down and down and down until they turned it off, and then they turned it back on manually, in my opinion, to take advantage of traders who were coming in and dumping long positions into the market. So we've seen, and I've kind of predicted this for a while, we've seen this trend of individuals leaving BitMEX, open interest falling on BitMEX, and open interest rising on other exchanges, Binance Futures, ByBit, FTX, FEMEX, and on CMEs. on the CME. So we are seeing the CME open interest rise dramatically. Here is a nice chart from, again, Charles Edwards this morning. So here is BitMEX XBT-USD open interest. We can see that it's currently sitting roughly around like 550 million, 600 million. And we can see open interest on the CMEs rise just a little bit below 500 million as of this morning. So very interesting to see this open interest on the CMEs continuing to rise, this very positive trend of institutional investment and interest in Bitcoin on the CMEs. And finally, kind of our last notable mention, about $1 billion worth of Bitcoin that was stolen from Bitfinex all the way back in 2016 is still at large. However, a few Bitcoin have found their way back to the exchange. You guys will recall that Bitfinex kind of made a, let's say a plea bargain. They said, well, listen, guys, if you just return the Bitcoin that you stole, we will give you some of the money, right? Rather than like running around out there and getting caught. However, keep in mind, they've already done something illegal. So if they were to get caught by authorities, it's already done for them. But recently, about 120,000 Bitcoin, this was stolen from Bitfinex back in 2016, started moving again. We reported on this at the time. And let's actually see here. Thus far, the hackers have moved less than 3,000 Bitcoin out of almost 120,000. The highest proportion of coins that have been spent went to dark net marketplaces, with the Russian giant Hydra leading the pack at 736. It says here, this could be worrisome because this implies a large amount of Bitcoin could be dumped at the market at any point. Good, I can buy lower. On the other hand, this could be an indication that it is becoming increasingly difficult for criminals to launder stolen cryptocurrency, which is true as we continue to see more chain analytic firms, Chainalysis, CipherTrace, and all of these companies get more efficient with their chain analysis. It does become more difficult for stolen cryptocurrency to be laundered, right? So, you know, however you feel on either side of this, of course, we have privacy advocates that do not like the fact that, you know, Binance and Bitfinex and Bittrex and the major exchanges kind of communicate to basically blacklist coins, right? And Jack poignantly talked about this yesterday when he talked about the potential dangers of using a mixer, right? Because you could get coins that have been blacklisted, right? Let's see here. Yeah, some of the stolen Bitcoin found its way to Huobi, Binance, and Bitfinex in 2019. Says here, we cannot make this conclusion with complete certainty, but what we know is that there were no identified entities such as exchanges, mixers, or payment processors between the origination point and those exchanges. If our conclusions are correct, then those exchanges should have the names of the hackers or their accomplices. Which, by the way, scrolling Twitter brought up an interesting conspiracy theory because it said, well, if all these exchanges, remember Bitfinex launched the Leo token, and the ICO, the Leo token, and the investment from that was supposed to recoup this, and then also the it was also utilized to kind of patch the funds that were taken when Bitfinex when the Tether Treasury made the loan to Bitfinex, right? So, Bitfinex did another like fundraiser back in 2016 to recoup the funds from this. However, this brings up a conspiracy theory. I'm just going to give it credence. I'm just going to, give it light here and flesh it out. This doesn't imply that I believe in it whatsoever. But of course, you cannot get away from a lot of conspiracy theories that fly whenever we mention Bitfinex. Obviously, they're in hot water with the New York Attorney General's office. And now other exchanges are as well being listed as plaintiffs in this. As parties in these lawsuits against exchanges for manipulation. And, basically, again, this conspiracy theory basically unravels as, Bitfinex was behind the hack or was involved in the hack. They did it deliberately so they could launch their little fundraisers, which eventually, again, led to the Leo ICO token, where they raised over $1 billion. And they know exactly where these funds are. And they are now kind of slowly bringing them back to the exchange. And they've just kind of got stuck. So I don't know if I necessarily believe that. In fact, I really don't necessarily believe that. But just interesting. So you guys can do a little bit of research on that in the dark, deep bowels of Twitter if you guys so desire. Here in a little bit, we're going to be covering the institutional investor survey that Fidelity Digital Assets recently did. Obviously, the arm of Fidelity, the trading platform, mutual fund giant. So With that being said, let's get into current price action. All right, we'll start off on the daily. Here we are on the daily. We will start off on the daily, as I said, for like the 9th time, because repeating yourself sometimes helps you keep on track when you are attempting to keep on track. Remember, repeating yourself, it can help you stay on track. All right. So here we are on the daily time frame, BTC USD. We're looking at the Bitstamp chart. Not a whole lot to report today. We'll be looking at, obviously, the Darth Maul situation that occurred last evening, and kind of looking at the volume and where longs and shorts were offsides. Shorts initially were offsides. I know a lot of individuals, it seemed like all of crypto Twitter long in that breakout last night. I did not. I kind of tweeted about it chagriningly. We'll get to that in just a second. We are still in the midst of a bottom feeder signal. Bottom feeder still calling for a movement up to 10,223. Stop loss at 90.40 on that trade. That is active. Parallax agrees, and Minx now currently agrees, having crossed over the noise line, the signal line that is, of this momentum oscillator in bullish territory. However, we do have contradictory evidence here because, if we're looking for swing longs, all right? So swing longs are still out, right? This is an alternative trade. Bottom feeder is designed algorithmically to assist us in identifying trades that our primary systems would otherwise be unable to capture, right? So when we're building automated systems, for me anyways, I'm looking to build systems that do not replace my primary system. I'm looking for systems that can assist. That can catch trades that I otherwise would not be able to catch myself manually due to my time schedule. So Parallax confirming with the long trade, with the reversal long anyways in this case. Minx confirming this to the upside as well. Looking at the baseline, the 60 Hall moving average, we are still below, although we did reach up to test the boundary of the baseline today. Nothing, so no swing longs until we're on the other side of that in its simplest element. And looking at our volume or volatility filter, looking at Wadatar explosion, we still see inconclusive volume evidence here. Delta is still negative. However, we are just not printing enough volume and or volatility to give us justification to take a trade. Wada columns remain below the explosion level and below the dead zone level. So depending on whatever filter you're utilizing with this indicator, which is free and public on TradingView, by the way, you guys can download this indicator onto your charts right now. There's nothing going on. We need volume and volatility to generate a movement, and volume and volatility on a higher time frame, right? We need significant volume on the daily time frame, significant volume on the weekly time frame to really tell us that there is going to be motion, sustained motion in this direction. We need volume to break past liquidation points. We need volume to break past position sellers or position buyers in whichever way the market decides to break, right? So overall, daily technical indicators here are pointing about 50-50. And the only thing that we have on the table as far as active risk would be the bottom feeder signal, which I am currently in. Having said that, let's go down to the 4-hour time frame. What I've done here, and it might be a little difficult for you guys to see, but here I'm just using a combination of liquidation points that I've identified through my own means with current entries. And I've also identified the current range, as you can see with, we can see this with VPVR, VPVS, but with delta volume candles, which is an indicator I've been playing around a little bit with lately, just for establishing range high low. So we have range high resistance, 98.33. Sorry. Let's go back to that daily time frame so that I can put that number in your head so that you can find the confluence. 98.26 is where the baseline currently sits at. 98.26 is the level to close the daily above to justify long swings at this point in time. So be watching for that quite closely. And getting down to the mesos here. Again, we have some nice confluence there with range resistance at 98.33, range support at 94.47. Interestingly enough, a lot of longs did enter into the market on this movement downwards right around this last kind of this 12-hour period right here. So beginning on this movement to the downside, as soon as price started to recover a little bit on the lower time frames on this wick to the downside, this Darth Maul candle, although it's not really that impressive of a Darth Maul, just the most recent, most volatile movement in Bitcoin that we can talk about, we did start to see longs begin to stack up, meaning that their liquidation price for 25X is going to be around 9,400, which is right at range support. I really feel that longs are likely offsides at that level because a retest of range support is always very likely, just as it retests of range highs. And wicks slightly below that level. Better position longs currently sitting at around, liquidation prices currently sitting at around 93.07 to about 92.50 is liquidation prices for them. Whereas 25X shorts, which haven't really been tapped yet, still remain between 99.02 and 99.5, which just again, all of this is kind of just rehashing what is pretty well known from anybody objectively looking at the charts. You know, breaks of 9400, 95, 93 on significant daily time frame, or like on the daily time frame with high volume is pretty indicative that we've failed this level and we are going to sell off, that we are going to sell off out of this compression. Meanwhile, breaks of 10,000 is pretty strong evidence that we are going to continue to charge to the upside because we will have passed really all the position sellers that are established at this point in time, and they're going to puke their positions, and that's going to lead to cascading stop losses. That's going to lead to cascading covering of short positions, and that accelerates price to the upside, as well as FOMO buying coming in on range breakouts, momentum breakouts. So other than that, we remain within the range. Nothing really attractive for a setup for a trade for me intraday today. So still holding the long position, still holding. I have more long exposure now, but still holding a bit of short exposure that I opened up at the range resistance here. I talked about that yesterday, so that I have locked in the P&L, because on my original position, on my original long, I was already in profit. So I'm locking that profit in with that short position. Now, this is, again, in any way, sense of the form, I normally would not hedge this way with BTC USDT. However, in this particular way, I am locking in profit and allowing myself to increase exposure to the side that I think is likely, which is to the upside still at this point in time. All right, let's go down to the 45 minute and just look at what's going on today. We do have price in backwardation. Derivatives price, BitMEX price is in backwardation with positive funding and positive predicted funding. This is really nothing out of the mean. We see volume quite low following, really the only thing that we've seen insofar as volume was that movement to the, was that Darth Maul candle that happened right after daily close last evening. Nothing indicative, very low volume. If we go to the daily, wanted to point this out as well, and let me actually go over to this chart and pull this one up. Yeah, if we go over to the daily on Bitcoin here, we can see this just continuing trend of declining and declining and declining and declining volume as price pushes up. This is generally not positive. Falling volume is generally bearish. So just taking this metric in and of itself, one would have a bearish bias. Of course, I'm waiting for that breakdown and all of those confirmation indicators to send me into a full risk short. Because if that were to happen, if we really do fail this range, we would probably see a pretty significant correction, 20 to 30%, which would be fine, in the long term here. All right, so fairly low volume, no signals from ISA Spot. ISA Spot did generate a buy signal down here on the lows when price did reach pretty extreme backwardation. Price, of course, experienced high premium here before shorts were stopped out. And we find ourselves consolidating at today's point of control with no significant movement really in place. Just looking at these lower time frames, we did see price attempt to break above yesterday's point of control at about 97.50. That movement failed and was sold into. Watch that, because that is where 100x shorts are going to be having their liquidation price now. And so if that level breaks, we can see some upside momentum from that level. Similarly to the downside, we can see current lower time frame range support at 96.50. This is also where any person that is 100x longing at this current price is going to have their liquidation at that price level as well. So again, fairly tight range, and we continue to tighten up. And those watching these lower time frames, those watching these levels can generate opportunities. Just remember, use low risk when trading with these methods, because you have a very high probability to be wrong. It requires constant attention and a very small threshold for failure, a very small ability to be wrong. Daily swing trading is far more efficient, far more effective, and far more stress-free. It's really all I have today. We do see SPY futures after a pretty decent movement over tonight's morning. We are marching back up fairly languidly, back up to about the 50% retest. So current previous resistance that we broke above. Nothing really conclusive coming from SPY futures. Good sell-off as kind of expected after breaking new all-time highs, but we'll see where we go from here. And we see here CME futures having a fairly negative movement back down. Still bearish on CME futures here. Have been bearish since we broke down below the baseline. So 10,165 down a little bit from yesterday as the level for the CME futures for those watching that as their trending metric. And again, looking at current price action, we do see backwardation in price generally means the price will move up, in my estimation and experience. All right, looking at the broader cryptocurrency market today, we have, hold on, let's get a nice refresh in here. Altcoins doing really, really well, particularly shit coins, particularly low cap coins. Lend up 18%. I do know that Alex got the premium trading group into a Lend trade yesterday that is currently up 14%. Good on you, sir. Fan favorites, Unibright down 6.4%. Why Unibright? Why no Moon? Maker up 21%. Loopring again continuing to move. Kyber Network up almost 18%. Nano, Crow, Ontology, big gainers of the day. Komodo and Verge doing well. I know that we are in Verge as well. So good movements trading against Bitcoin. The altcoin, the ability to sit in altcoins and continue to make money are doing well. And there we go. From Alex here saying he did put us in Len yesterday, but we are also in Atom, IOST, Verge, Ches, and Basic Attention Token. Good on you, sir. Trading against the dollar, again, we see things well. Altcoins are going to continue to do well as long as Bitcoin enters into this range. All right, looking at the alternative system here, nothing really coming in here. True Strength Index remains below the signal line, and that divergence is now widening a little bit. So hopefully looking, ideally, those looking for longs are kind of watching for something like the True Strength Index to give that crossover as time transformation has crossed over. Dynamic money flow is positive, and we are above the Ichimoku cloud or the 26-period Donchian, which is pictured here, or the Kijun, however you like to place it. But we just don't have that full confirmation yet, and this would be giving us bearish signals breaking down at 95.75. So again, I've been fairly consistent about this for pretty much all of last week and this week. Daily closes below 9,500 begin to look quite bearish. Daily closes above 10,000 begin to look quite bullish. And be careful while we are pinned in between those ranges. All right, let's take a look at ETF indices, starting off with the DIA ETF. We are getting a sell signal on the Dow today from time transformation. Again, as I said, no guarantee that we do see a massive sell-off here. But as I said yesterday, with the Dow, with the NASDAQ really breaking new all-time highs and gapping up quite bullishly on Monday, I just felt, again, who ordered some froth? This is not the area to be looking for longs on indices. Again, my commodity exposure is doing well, and I think that those trades are well positioned. However, I am in the midst of making a pretty fundamental decision with my growth stocks that I've held for quite a while. I'm not touching my dividend stocks, but I think the growth stocks at this point in time, I would be best served by reallocating those to real estate, which is something I've wanted to be increasing my exposure to for quite a while. So yeah, keep you guys posted on that. My big dilemma was, do I allocate to active income, i.e. real estate, or do I allocate to passive income, i.e. silver, which I still want to increase my holdings of physical silver particularly. And I think that although what I will continue to do is continue to allocate funds to physical silver moving forward with my profits. But I think that when switching around large pools of what is currently passive income from my growth stock, really it's active income because it's an active growth investment trade. I think that I'll be moving that into real estate. So keep you guys updated on that. All right. So sell signal coming in today from time transformation on the DIA ETF tracking the Dow. Looking at the Qs today, the triple Qs, not getting that sell signal. Continued expansion to the upside after that retest of our resistance level at 237.47 yesterday. So still positive expansion coming in from the Qs. I still don't want anything to do with it until a pullback. That might mean I get left out in the cold. However, as Warren Buffett, one of the things, I read this interesting article that Warren Buffett's losing his edge because he didn't really do anything because he's old and, he didn't want to do anything in the midst of the crisis. He didn't want to take big risk, whereas, big risk, big reward, low risk, low reward. He's become quite conservative. But I think I will take a page out of his book here. SPY, also tracking the SPX 500 index, the S&P 500 index, giving a sell signal from time transformation today. So watching for a pullback, and I will let you guys know on re-entry into traditional indices. And again, let's take a look at VXZ. Looking at the VIX and the VIX ETFs, this showing a nice gap to the upside here, while still bearish, are getting this crossover in oversold territory from our big VIX indices, right? So big gaps to the upside here. As I talked about yesterday, potential play on longing VIX, not for me, but particularly if you have long exposure, if you want to pick up some long VIX to hedge against, not a bad play. Not a bad play, particularly with the move contract. Longing volatility on the cryptocurrency markets right now might be the killer trade on the table. All right, let's see here. Let's look at my commodity trades. DBA still long, not much going on here. In profit on this trade, although they are testing, they are trying. I got nothing. Corn pulling back down. I had a successful trade on corn. Hit take profit one, has pulled back down to my break even and triggered my stop loss. So I am out of corn. Unfortunately, I did lose on my wheat trade, entered it pretty much the wrong time and just went the opposite way. So wheat will be closed out today. Of course, it's already hit the SL. All right. And we will talk about, let's see, and palladium gapping down today. We'll look at the CFD here in a little bit. I did enter some long. I do have some long exposure on palladium, but we're chopped back down to the baseline right here and kind of have to watch this one closely for daily close. So overall, might end up exiting the commodity. Well, let's see here. So far, good on DBA, successful trade on corn, unsuccessful trade on wheat, and currently unsuccessful trade on palladium. So be it so far. Been doing pretty well on ETFs trades so far, so it's okay to have a setback in my equity curve like this. But again, I'll be watching palladium closely to see how this one sorts out over the next few days. Let's see here. Other than that, the Kiwi dollar, which I've been holding to the long side, I do believe is generating an exit signal today. So I'll be taking profits on my Kiwi dollar trade. I ended up taking profits on my Canadian yen trade yesterday. I also took profits on JJU. Actually, so that's not quite fair because I am overall still quite up this month on ETF trades because of JJU and because of JJT. JJU generating a high volume, unnatural volume signal on time transformation for the daily. So I think that I was not offsides. I could have captured more profit if I would have waited for this particular signal, but you don't know a priori whether that's going to happen. So JJU does look like a good exit. I tweeted about these trades yesterday, and I did exit JJT yesterday as well on that exact same candle, that unnatural volume candle. And we are seeing some more follow through on JJT. However, I was quite happy to capture this profit on JJT, about 10% on JJT, a little bit less on JJU. So actually quite good trades. Let's see here. Basically at break even on the euro pound. This one has not moved the way that I wanted it to. Unfortunate trade on palladium. I remain short on the Aussie Kiwi. The Aussie Kiwi did it. My first take profit today. So overall, Forex trades doing well after a very beautiful run on the Canadian yen, a very good run on the Kiwi dollar, and I'm hoping for a nice run on the Australian Kiwi moving forward. But of course, we've already hit take profit one. Now I'm in a no loss situation. Don Camden, I am not rocking a long live XRP. This is just a cracking cryptocurrency t-shirt. This is my standard attire, sir. So that's about it for me today. Insofar as the risk that I have on, let's go ahead and look at our big dogs today. Gold having a nice, gold having a nice bounce back up, but gold is still a no trade for me. Nothing to do here with gold insofar as my opinion. Some conflicting signals, obviously, from our momentum indicators. We'll look at the primary system and see if that signals for anything, but just looking at this particular system, which, is quickly becoming the public system, nothing to do as far as gold did. And again, some offside signals on palladium. I will say that the one thing that I didn't like looking at palladium was the lowered volume on this particular movement. Palladium has been quite choppy in this range over the last week or two, but I took my chance and we'll see how that one ends up playing out. Still no play on silver yet at this time as a tradable asset. Silver sitting at about $17.65 as we currently sit it. Good above $17, but below $17 we begin to look like we are going to have a pullback. Platinum giving us that same no trade kind of chop that I'm trying to avoid as well. Let's see here. And the corn CFD as well. Hit take profit one on the corn CFD. We have pulled back to break even. So again, didn't make as much profit on my corn swing as I wanted to, but still was able to extract profit from Owanda. Thank you very much, Owanda. I appreciate you supporting my lifestyle. All right. Quick glance at Forex here. Aussie yen pulling back, as well as the Australian Canadian actually generating an exit signal today, as well as the Australian dollar. Canadian Swissy, I believe. Yeah, did not generate an exit signal, but certainly we have seen a pretty big pullback here on the Canadian Swissy, all the way back down to the baseline. Not bearish yet, but no re-entry yet. Same with the Canadian yen and the Swissy yen, which I had no exposure to. We are seeing some of the euro pairs begin to pick up a little bit off the bottom. The euro Canadian, I still want absolutely nothing to do with. The euro Swissy pulling back. Alternatively, the euro Kiwi and the euro pound showing a little bit of positive here. So I'm hoping that reverses for the euro pound, but I'll keep you guys updated. Meanwhile, the euro dollar is right back up at its previous high. No play on that. Pound pairs are poking their heads back up as well, at least against the Kiwi and the Canadian. Swissy showing that same pullback that we saw in that CAD Swissy, as well as the pound yen. The pound dollar is kind of floating in the air in extreme overbought territory. Pound Aussie picking itself off the bottom a little bit. As I said, the Kiwi dollar generating an exit signal on today's candle, so I'll be taking my profits on the Kiwi dollar. Beautiful run on that, as well as the Kiwi Canadian, as well as the Kiwi Swissy, as well as the Kiwi yen. Dollar Canadian pair, not much to do. Reversal buy signal on time transformation. So certainly this is an exit short opportunity for the dollar Canadian. The dollar Swissy chunking down pretty hard, as well as the dollar yen, which still too high volatility, but might become a short in the meantime. Aussie Swissy pulling back as well. And the dollar yuan pushing back up. No objective exit signal. However, this is a crossover in oversold territory. So a potential exit signal as well, right down at the range low. So not a bad place to exit shorts on the dollar yuan for those who captured them. All right, so that's Forex, that's CFDs, that's indices, that's cryptocurrency. We didn't really go over the crypto majors. Let's go over the crypto majors. Still no play on Ethereum USD, still hanging right in space, looking for breaks to the upside, or just continuation signals from Ethereum. They've been quite choppy, so I've been ignoring them. EOS USD pulling back down to the baseline. No play on EOS. It seems like the launch of their social media platform did not generate the fundamental excitement that they wanted there. And XRP USD, I mean, just hit me over the head with a shovel for this particular pair. As I said, big news in the cryptocurrency space today is, of course, the low sat coins, the shit coins. That's the high risk reward. And as I will say, this can continue on for another week or so. Probably less. But we've kind of seen this flow of funds from Bitcoin into large sats, into mid sats, into low sats. And then where does the money flow back to repeat the cycle? Into Bitcoin. So when Bitcoin breaks range, I would be watching your positions carefully. Everybody has come out of the woodwork. I'm seeing altcoin shilling. I'm seeing lots of altcoin TA charts calling for long-term fundamental bottoms, big movements, weekly charts. Be really careful about that stuff, guys. Be really careful about that stuff. This happens, several times a year when Bitcoin enters into these like multi-month ranges and money flows into altcoins and they start appreciating quite high. And then we start breaking range, like ranges that were set. It's like the ultimate, like moving the goalpost, right? Because these like resistance levels that are going to lead to multi-week runs in altcoins, they just get lower and lower and lower every year. I don't know about you guys. I've been charting this stuff for several years now. And I see all of these altcoin TA experts and those levels, those diagonal, those horizontals, they just keep moving lower and lower and lower and lower and lower every single year. Now, I'm not saying that an altcoin season can't happen. I'm just saying, show me the money. And what I've seen is this cycle of money flowing from Bitcoin when it enters into a consolidation range into large sats. They pump first, then the money moves into mid sats and they pump first, then the money moves into low sats and they pump last, and then the money flows back into Bitcoin. Bitcoin either pumps or dumps, and everything dumps relative to Bitcoin. Be careful. With that being said, if you guys are enjoying the content, make sure to subscribe to this YouTube channel and smash the like button, guys. Let's see if we cannot get up to and above 75 likes. We can do it. I have faith in you guys. If you guys are watching us on Twitch or DLive, you can support us with a follow or a subscription. Links down below if you guys want to support the channel. And one way you guys can support the channel is by watching this beautiful video that Jason made about probably our favorite exchange to trade on, which will be ByBit. Let's go see how Jason's doing over there on ByBit. Can't catch a break over on BitMEX with all the wicks? Try a better alternative at bybit.crackingcryptocurrency.com and rest easy for a change. I love that video. I love it, man. All right, we're going to get into today's news with our cryptocurrency segment, so let's get going. All right, our first story today is going to be about institutional investment and Bitcoin. Is there a correlation? So, Fidelity Digital Assets, they are the investment branch of Fidelity, as you guys will know. They just conducted a recent survey of about 700 some institutional investors from the United States and Europe to see what their interest, what their attitude, how their kind of tolerance or opinion of cryptocurrencies has changed if we consider cryptocurrency an asset class worthy of investing in. And as the metrics we will show you appear to show, that interest and confidence is growing, right? And those conclusions are not just mine. Those were posted by the president of Fidelity, Tom Jessup. He published a press release earlier today talking about this topic as well. Now, this is the press release from Mr. Jessup. Now, as I said, Fidelity Digital Assets is a crypto-focused subsidiary of mutual fund giant Fidelity Investments. They're based in the United States. And this survey was not just institutional investors, it was also fund managers. It was conducted between November of 2019 and March of 2020. The results were just published and outlined in this press release. So we're going to go over some of these findings briefly. Okay, so we are going to see that. Let's see if I can actually find it on the page here. All right, we will start here, which is not the first major point, but here and here and here. All right, these are points we're going to cover here. So almost 80% of individuals that participated in this survey do find something appealing about the cryptocurrency markets as an asset class in and of themselves. 36% of survey respondents said that they are currently invested in cryptocurrencies. And 6 out of 10, that's 60%, if I can do math, believe that cryptocurrency does have a place in their investment portfolio somewhere. You know, maybe right there next to Boeing stock, maybe over here by physical silver, somewhere. US investors, as opposed to European investors that have cryptocurrency allocated in their portfolios, increased 5% from 22% to 27% in 2019. It may not seem like a big increase, but when we're talking about big players, this is a fairly significant movement. Now, of all investors, US and European, who do have exposure already to cryptocurrency, 60%, and this is interesting, I found this very interesting because we're seeing so much interest come into the Grayscale funds. Over 60% of those who have cryptocurrency in their portfolio say they buy those assets directly, meaning that they are likely doing their own self-custody. This doesn't, it's impossible to conclude that. It is possible that they are utilizing still some third-party service like BitPay or something like that. However, it does increase the percentage of individuals that certainly are using self-custody. Now, in the United States, 22% of those who responded in the United States, 22% of those invested in cryptocurrencies have exposure to cryptocurrencies via futures, so not physical holdings, right? And that is up from just 9% that have exposure in futures from an earlier study conducted in 2019. Now, over 25% of respondents are already holding Bitcoin, and 11% have exposure to Ethereum. Boom, right here. We just covered that. Finally, 91% of respondents who are, open to having cryptocurrencies in their portfolio expect to have at least 0.5% of their portfolio allocated to crypto assets in 5 years. And this is, while a small number, this is certainly a good number. Again, I've seen these. You can find all kinds of videos here on the Tube of You. And we've talked about it before, whereas, if you look at all of the assets under management by Fidelity, if they move just 1% of their AUM into cryptocurrency, you're talking about a massive, massive raising of the overall market capitalization, right? Now, if we take a closer look at the 80% of institutional investors who reported finding something appealing about digital assets, remember, 80% of respondents said they do find digital assets appealing. We do find 3 characteristics that seem to be compelling, or as responded, are compelling reasons for investing in cryptocurrency from both United States and European investors, right? And right here, I'm going to cover this section next. So the first thing, 36% reported the their appeal to investing in cryptocurrency as it is uncorrelated to another asset class, right? As the leading reason for their interest in cryptocurrency. And this is a very common narrative. There's a lot of, now I would say that the facts do tend to dispute this somewhat. However, we have only really seen strong correlation between the stock market and the SPY recently, following kind of the March meltdown. And overall, it does more seem like a Bayesian random walk when we look at correlation between traditional markets and Bitcoin. Some days Bitcoin pumps, whereas the stock market is doing relatively nothing. When just about everything, when the entire market is in a risk-on rally and moving into assets in a wild way and getting away from currency because it's being debased due to inflation, due to money printing, then you're going to see all assets pretty much move in the same direction. So, looking at the correlation between any assets over the last few months, I think is incorrect because you're ignoring the fundamentals that individuals don't want to hold currency. So anybody who has, large amounts of currency don't want to be holding that because they know that is going to be, that's worthless paper, and it's becoming more worthless as the days drag on. So not correlated to other assets, strongest reason why individuals are moving into Bitcoin. So a hedge against a hedge against other portions of their portfolio. At 34%, kind of going for the value, right? The innovative technology play as their primary attraction, right? Well, Bitcoin is the new big thing. This is the next Silicon Valley thing. So we're getting invested in this. This is a very popular narrative. Again, particularly if you go to these tech hub sectors like San Francisco. Of course, I was there for San Francisco Blockchain Week, and that VC mentality is certainly there and strong and cannot be ignored when we are trying to incentivize investment into Bitcoin. Now, finally, 33% reported a high potential of upside as the central draw to invest in this space. So overall, we've got a fairly good, blend there, right? About a third say, well, this is a hedge against my other holdings or hedge against inflation. The middle says I want to be in the next sector. I want to be in the, I want to allocate my portfolio to the new big thing. I don't want to miss I missed the tech bubble. I missed the real estate bubble. I want to get into the cryptocurrency bubble. So that would seem to say that we haven't seen that real bubble yet. And finally, the last third are like, well, we want to make money. This thing's going to pump, right? As the central draw to invest in the space. Now, interestingly, investors were also asked if things like Bitcoin being free from government control and full intervention was a big appeal, to which a quarter of those in Europe responded with yes, while only about 10% of United States-based investors cited as a reason. So resistance to government intervention as what drew their interest into cryptocurrency. Kind of highlighting that, at least for Fidelity investors anyways, the Europeans are a little bit more ahead as far as anti-statism. Go you guys. Now, let's go to our final link here. As for why such a trend was observed between the two big regions, right? The European investors and American investors, Jessup commented, talking to Bloomberg here, that Europe is probably more supportive and accommodating, likely due to what's going on in Europe right now, right? Kind of I don't want to say social unrest, but obviously political upheaval, negative interest rates in many countries. So Bitcoin begins to look more attractive when there are so many other assets that aren't paying any returns at this time. We're seeing a lot of companies cut dividends, for example, right? Now, as for what investors felt was the main obstacle to widespread institutional adoption of cryptocurrency as an asset class, three major concerns were cited, and we've heard these before. Obviously, price volatility, right? Price is just too volatile for me to feel secure with my investment in this on a day-to-day basis. Now, the interesting thing about this is that this is a talking point. However, in my opinion and in my experience, for me anyways, the price volatility doesn't concern me with long-term investments because I just simply look at, if I'm concerned about price volatility and overall my investment's performance, I just look at the kind of year to year to year to year gains, and I look at the fundamentals that are going on. And this shows me that, Bitcoin is going up in a fairly significant way, and all the fundamentals are aligning for that on a long-term scale. Uncertain, the second citation here is uncertainty around market manipulation. This certainly was a massive concern and still remains a concern for investment and kind of the public appeal of Bitcoin as something that's safe and secure and fine. However, we have seen big strides toward cleaning that up. For example, the Bitwise real volume, and overall we've seen, it's not done yet, but overall I would say that we've seen a pretty significant trend toward more accountability and more transparency from exchanges and Obviously, and as well, I'm really excited about things like decentralized market making, right? That removes a lot of impetus for these things to happen, right? And finally, kind of a lack of fundamentals to appropriately gauge fair value. Now, I think this is entirely incorrect, but again, this is coming from them, right? So they're just expressing what they feel. And this is true for a traditional investor that is new to cryptocurrency. They are used to evaluating things like cash flow, debts, PE ratio of companies, and obviously looking at lots of statistics and, countrywide situations, global economic factors to measure things like commodities. So certainly the lack of those easy fundamental metrics can be a challenge for them. Bitcoin has its own fundamentals, on-chain data, for example. And, just kind of as this becomes, just for example, look at Glassnodes. We didn't have Glassnodes like last year. So just as this continues to spread and this on-chain data, and the longer Bitcoin survives, we get more and more fundamental value for these institutional investors to more appropriately gauge their investments into cryptocurrency, right? However, among those doing the survey from the United States, the strength of these concerns, like how much these affected their decision, how negatively these affected their decision, was said to have dropped substantially since last year's survey. And this implies that investors are getting more comfortable with Bitcoin as it matures as an asset class. And according to Jessup, these investor concerns are largely focused on issues that will resolve themselves as the market infrastructure continues to evolve for Bitcoin. And as I said earlier, just the longer that it survives, right? So this survey, this digital asset survey, is conducted annually. And this most recent one, as I said, had about 774 institutional investors, 393 of which were in the United States, 381 which were in Europe. And they include managers at pensions, family offices, digital and traditional hedge funds, financial advisors, endowments, and foundations. So I think that we're going to see more individuals participate in the survey moving forward, and it does give us a good glimpse into kind of stuff that we already know, honestly. But it's just so easy for that stuff to be thrown around and mischaracterized. And a lot of individuals that are participating in cryptocurrency at the retail level, meme what's going on at the institutional level. So, but this is just cold hard data that the narrative that institutions are coming is not incorrect, but it's just slow and it takes time. And we are seeing massive progress and growth in that sector. So for those who in any way, shape, or form point to a lack of institutional involvement or excitement or interest, really are not looking at the facts. So I think this is incredibly positive for Bitcoin moving forward. And I think we will continue to see these metrics grow and more larger investors find a place in their portfolio for cryptocurrency and Bitcoin, as they rightly should. Let me know your guys' thoughts and comments in the section down below. Question for this segment for you. Put it in the comment section. It's a good time. What's your main reason for investing in cryptocurrency, right? What's your main, let's say crypto, let's say Bitcoin. What's your main reason for investing in Bitcoin? Although you can branch out and answer about other cryptocurrencies if you so desire. What is your main impetus? What brought you to Bitcoin? What keeps you investing in Bitcoin right now? And what is your biggest holdup for investing in Bitcoin? Why have you not allocated more funds into Bitcoin, right? Is it the price, volatility, lack of regulation? Let me know. Comment section down below. I'd be fascinated to hear your guys' opinions and thoughts. All right, moving back into current price. Not a lot has happened. All right, what do we got going on in the chat? Crypto Caveman, good to see you, my friend. GBU Professor Wally, what is up, fool? The Donation King himself. Shout out to you and Gunbot University. Hopefully you guys are killing it today. Jordan Stotts asking about the Cardano to the dollar. We will take a glance, sir. Let me see if I can get the guys on for some commentary on what we covered today. Give me one moment. All right, and we're back, joined as usual by Mr. Crypto Jack and Mr. Jason, junior analyst. How you guys doing today?
Fantastic.
Doing good.
Hope no one had too high a leverage on yesterday's candle, because you were, no matter what direction you were in, you probably got worked.
Yeah, let's break that down, actually. Hold on. I'm just getting the... Getting this all set. Boom. There we go. Okay. That looks good. I believe Mr. Alex will be joining us shortly. All right. Green room. Make sure I got plenty of room for him when he comes in. Okay. Yeah, so with regards to this, there's not too much to say. We had liquidation levels for shorts right around 98.50, and I knew, I just was watching crypto Twitter as I came back to the desk last night before bed and saw the aftermath of what had happened. I wasn't sitting at the desk for the active movement itself. And, it just seems like a ton of individuals, and, I'm not going to lie, a lot of bad traders, but some traders that I respect, took the long breakout trade, with high positions and high leverage because they really were looking for that range breakout. But they were not rewarded. So shorts were initially offsides, cracking that liquidation level of shorts between 98.50 and 990, a little bit under 9,900 at least on spot exchange. Well, this is ByBit, excuse me. And I'm immediately swiftly rejected. You did see some big sells come in right around that level. But however, most position sellers entered right around 97 to 96 actually. Or excuse me, 97.50 to 9,700. So that puts their liquidation prices, if we look at the 4-hour chart, that puts 50x licks at 97.90, which is tight, and 25x between 99 and 99.90. So Don Candon bought the top and sold the bottom. Divorce papers were filed.
Divorce papers were filed.
Here we go. All right, tough crowd, guys. Jack, what do you think, man? DeFi markets back at $1 billion in total value lockup. Bullish trend or sign of the end of times?
Yeah, big recovery. So I think it's largely positive for the DeFi space. Black Tuesday wiped out a lot of the collateral on DeFi, so maybe there was a risk that people would have been soured and not returned too quickly. But apparently, DeFi is the crown jewel in Ethereum's cap, right? So apparently, nothing's going to keep investors and speculators away, I guess, and people dabbling with the new tech. And so DeFi continues to be, one of the hottest use cases for crypto. And, if you look at Maker's recent performance, it's certainly booming. So Ethereum continues to attract that sort of interest, largely positive for the space. It's nice to see that, despite Black Tuesday and even some of the high-profile DeFi hacks and failures we've seen in the last couple months, it's not really keeping anyone away. So, largely very, very positive, very bullish potentially on the whole DeFi space.
Yeah, I think that trend is likely to grow as well. They're just attempting to solve so many potential, sticking points, right? And offer offer services that, obviously we are excited to have on blockchains, on public blockchains, rather than in private financial institutions. And I guess as long as MakerDAO, continues to allow individuals to leverage up their Ethereum, there'll always be that.
Hey guys.
Hey, Alex.
Hey, Alex.
Welcome. Welcome to the madness, my friend.
Thank you.
Another day.
I will say this as well, with regards to DeFi, and I've seen this like trend switch or, happen so many times. It seems like there is this whole pool of traders who basically are doing like penny stock picking, right? It's not really technical analysis. It's fundamental analysis. It's really like, what's the word? You see it in penny stocks a lot. People are kind of looking for, and you've always seen this with cryptocurrency. Yeah, like what you would kind of call due diligence, but really they're just looking for upcoming fundamentals and, low price to accumulate and then predict, kind of sell this narrative around selling this price, right? And this has happened a lot lately with these decentralized finance protocols and ERC20 tokens. I've seen this kind of resurgence of kind of the old pump and dump scheme.
Mm-hmm.
And to their credit,
do you think that is a fundamental part of how this works anyways? Because, if you look at the market, OTC stocks, pink sheet stocks, stuff like that, people would look for that big gain, stuff like that, but most of them would lose their money. Do you think that this is the same type of thing that they're doing in sense to get uninformed investors' money?
There is one aspect of the markets that has been true as long as I have been alive, which is there will always be a small niche of individuals that this channel, appeals to, and that really come to trading and take it very seriously and build a system and look at statistics and do a lot of their work on system modeling. But the majority of individuals that come in, I would say there's always going to be a large niche of individuals that are continually looking for that get rich quick opportunity, that big trade, high risk, high reward, right? So so I don't think that, whether this is, going, all in 50x leverage on what they think is a momentum breakout, like what we saw yesterday with yesterday's Darth Maul candle right after daily candle close, like futures derivatives trading, or, we're seeing, options shenanigans. You can just go to like Wall Street Bets to see stories of these things. And then, I think that the penny stock altcoin space, particularly this particular facet that I'm talking about, is very similar, right? At least with this trading methodology, right? There's a difference between like accumulating something that you think has fundamental value and then specifically utilizing the trading strategy of like, all right, here we go. I'm going to go all in on this one and look for that 10x, 100x, 50x gain and then move on to the next, right?
Mm-hmm.
What is my opinion on the Buffett, right? And the dude's attained legendary status when you put the in front of his name, right? The Rock, the Donald, the Buffett. Is he really losing his edge sharpness, and is his time up? Well, I certainly think he's risk averse. So kind of the main narrative that's been spun is, well, Warren Buffett sold all of his airline stocks, an asset class that he said he would never hold himself. And then he has largely made no allocations during this entire sell-off and V-bottom recovery. So either in the main narrative, there's two narratives now. This is the new narrative that's emerging, is that he's old and losing his edge. The main narrative is he knows something that we don't. Like, he's such an intelligent investor that he's just waiting. But the other part of this, like Kenneth Starr came out and was talking about this. This is the report I was reading earlier from Bloomberg, is that, listen, there's a reality here that's impossible to get away from, which is the fact that as you get older, you get more risk averse, right? And, he's watching the calamity in the markets, and he just doesn't really have the desire or maybe the balls to make a big move.
It's not necessary for him.
Yeah.
Why at that, think about you, if you had spent your entire life building this person that he is at this point, what is he doesn't have to prove anything to anyone. Why would he not be conservative with his wealth? But that seems to drive people nuts. Like, oh, he's losing his edge. He's not making all the monster moves that are making all the money. Like, he's still preserving his capital.
Yeah.
So I don't know. Like, it's not really losing it. If he was losing all of his money, maybe he was losing his edge.
Hey, Justin, maybe pull up that post I just DM'd you.
Yeah, let me respond to Common Man Crypto's tip here. He says, thank you for the $5, Common Man. He says, Bitcoin, hour chart. Hopefully the 45-minute will do here. Downwards facing resistance from 2 days ago. So we've got 2 days ago would be right here, but I see which I assume you're talking about just overall, you've got this kind of declining trend line of resistance. I made it a little bit more conservative. I can make it more, maybe a little bit more fit for you. Break to the upside, catching the neckline. So, I mean, I think this is the horizontal line that I think is more attractive if we're going to go down this particular narrative. All right, so let's look at this green line. 97.65. Let's correlate that with 97.65 is a little bit below where I think shorts are 50x shorts are offsides to get their liquidation price hit. So at around 97.50 to 9800, you're going to start seeing high leverage shorts start to get liquidated. And really, if we kind of plot those lines, which kind of gives us right around 9,800, it's slightly above that. It's about $100 above that, where we start to get 25x shorts put into pressure. 99 to 99.90 is where I calculate their liquidation levels to be right now. So you're talking about kind of a break of 9,800 and then like a BPC, a break pullback continuation type setup. So you look for a break of this level and then catch the pullback. Yeah, that's certainly a valid setup. That is the proper way to take a horizontal resistance breakout trade. And then back up to overhead resistance around 10,100.
With that being said, that doesn't mean that you don't have to position size correctly. Because just hearing it here on this channel doesn't mean it's going to be right.
Yeah, pressure turns support thoughts. Yeah, I mean, I agree with everything Jason just said. But yeah, looking at that setup, if you were looking for a break of that range, you look, every time price has gone up there, it's automatically rejected. Justin on the hourly Sunday, bearish 3-line strike candle pattern. But yeah, that'd be a way to play a BPC, break pullback continuation.
I think he's trying to, by the wordage of what he's doing, I think he's thinking that this might be an inverse head and shoulders breakout.
Downside after the pump from 94 to 98.
I don't see it.
Yeah, I'm not sure if he's talking about that dip down to. It's hard when you can't look at the specific chart.
You can hear me, right?
Yeah,
Alright, good.
we can hear.
Good.
But I think that's what he's talking about, inverse head and shoulders on the hourly.
Mm-hmm.
I mean, it's possible. I mean, of course, we've broken back up to the kind of to the neckline here, but I mean, I wouldn't call that a textbook inverse head and shoulders. But I mean, there's definitely the setup here for the upside. But we gotta see what if we're gonna reject back from that
downside after the pump from 94 to 98. So you're talking about a level that was broke about 5 hours ago. So what, something like this?
Go to the hourly. Can you?
Yeah. Like this?
I
Hmm.
I don't think that's a valid trend line.
Yeah, I think that's an outlier.
If we broke it 5 hours ago, that would be right here. So it's got to be some level that was broken on this push to the upside.
Well, 5 hours ago would only be a little bit.
Yeah, like right here. So
Yeah,
5 candles ago on the hourly chart.
So he was talking about that dip, right? Right there, that big old sell off, and then whoop. But in order to be,
Don Cannon says, "This is not what I paid for, sir."
And I think downward sloping support is resistance. Is that Wait, no. If he says there's support that was broken,
Well, support was broken there for a second, or what is that? 4 45-minute candles, and then popped right back up.
I just don't think there's anything that got broken recently. Sorry, buddy.
Well, no, I still
This
think we're
is-
definitely within the range still. So
Yeah, nothing's broken here.
but we could be looking at it sometime soon.
All right, let's see here. Let me take a look at what Mr. Jack sent me here.
I do believe in bottom feeder, but it's not always right.
Both these links.
I got into a long. I posted it yesterday at 97.23, and then all that nonsense happened, so I'm right back to break even.
I posted a 4-hour long after the daily close, which was immediately stopped out within 10 minutes. That was nice.
Yeah, don't those ones suck? It happens.
Robinhood traders cash in on the market comeback that billionaire investors missed. Retail investors capitalized on the market comeback, unlike the billionaire hedge fund managers who said stocks would retest their lows. That's what they wanted you to think. See, what's really going on is these billionaires' hedge funds have created Robinhood accounts to hide their market activity.
Or they just don't care because they know something else is going to be coming, and the profits that are coming in now are just false because everything's over way too extended, and they don't really care about missing out on it. That's the way I'd play it.
Last Thursday, Laquan Godbolt. What a name. Godbolt? Oh, man. Purchased a call option for American Airlines that made him $200 on the millennial favored stock trading app. Whoa, hey. And he bought another one. He raked in those profits. One Chicago resident flipped his sister's stimulus check into nearly 10 grand.
These people are fucking idiots.
This is just bad reporting as well.
It's not bad reporting. I think they're trying to get retail investors to FOMO into the market.
That's why I think it's bad reporting. I think that this is causing FUD. I mean,
I think there's like
I think it's irresponsible. I think it's irresponsible.
Definitely.
I think it's irresponsible reporting. Because this is definitely going to have people fumbling into the market. Like, oh, well, they did that.
Yeah, but I mean, you're saying irresponsible as if they were trying to be responsible, but they are actively trying to get people to do the bad thing.
This seems like bad intentions all over it.
Yeah. Mm-hmm.
Which I wouldn't be proud to put out something like
Top
this.
stocks Robinhood members bought in the past month. Genius Brand, American Airlines, Express Spa, Vislink, Luckin Coffee, MGM, Delta, DraftKings, Hertz, Boeing, United Airlines, Carnival Corp. I don't own any of these stocks. Not a single one.
I noticed they didn't talk about Chesapeake. Chesapeake did something like 200% between Friday and Monday, and then trading was halted, and now everybody who had open positions, like once trading is unhalted, it will have gone through a good portion of the bankruptcy process. They'll basically be worthless.
Right. Yeah, I agree. That narrative, Alex, you've been talking about that for a while. Go ahead, Jack. What's up?
Oh, I was just going to say, pull up that Citron Research tweet I posted as a direct follow-up to this whole Robinhood retail FOMO.
American Airlines. To clarify previous tweet, the 25,000 new users on Robinhood who bought stock at $19 must know more about airlines than Buffett, who sold the stock at $11. Send your resumes to Omaha. Expect stock to trade back to $10.
Yeah, this whole idea that the retail using Robinhood knows something that the institutions don't. I wonder if that's going to come to play out, unfavorably to Main Street. All this fresh blood in Robinhood, they might be due to get wrecked. This whole thing might be one big dead cap bounce or another opportunity for the insiders to get out.
I think it is a gigantic dead cap bounce. I really do think that we're going to see lower lows over time, but I hope that there's a decoupling there. I really do hope that Bitcoin can decouple.
Yeah, stories like this. Yeah, sorry, Alex, go on.
No, okay. Well, for every seller, there has to be a buyer. There has to be a meter. There has to be a meeting of that supply and demand on the market. So the only way for institutions to offload large, incredibly large positions is to find retail liquidity somewhere. And one way is like, we talk about market manipulation where like someone pushed the price up and down. And, that can happen on some time frames, sure. But one incredible way to manipulate the market is to say, hey, I'm a big corporation with ties to the media. Let's say I have the media put out a report about all these people making all this money in the market. So people go into the market and buy up these assets that I am desperately trying to sell at as high a price as I can sell them, obviously.
We should reference this actually from what we're talking about this right now in that list of all of those stocks and revisit them in a month to see what's happening with them. Like,
well, I mean, literally all of these are going to be bankrupt. Like they're in bankruptcy, and the price of their stock going up does not change that. These people are literally playing musical chairs with their stimulus checks.
And with everyone and I believe that like they need this. They need that money to be introduced so that they have the liquidity to dump these gigantic bags. I think this is just like their little like, all right, we got to get more money. How do we get it? Contact the media.
So I gotta pull this back to my overarching narrative, right? This late stage empire kind of behavior, right? And what's really sick and unfortunate to study about history is the massive wealth transfers that always happen when a currency destabilizes, when the reserve currency destabilizes, and this might, I mean, if you guys are right, and I think that you are, if this is true, that retail traders are being actively fleeced into buying stocks at these prices when we are going to have another significant correction, then we're really seeing probably the worst possible example of corporate influence over the media, right? Or absolute what I'm going to call
crony capitalism.
Yeah, people are going to call it crony capitalism. I prefer to just say statism, because this is what happens when you don't have real capitalism, when you don't have free markets, when you have state influence over the media, when you have state influence over the markets. So it's a result of state influence, not free market dynamics.
Yeah,
but
if free markets existed, then these companies would be allowed, like bad companies would be allowed to die. Bad debt would be cleared off of the books. It's like allowing a forest fire and then like all the brush is cleared and then the forest can continue to grow in a much healthier way.
Mm-hmm.
Well, I find it interesting that on that list is Carnival Corp. And I know I was reading some article that the government was going to give them stimulus to bail them out of their current situation, but I don't believe that it's okay for the government to pick and choose which industries it wants to support.
Right.
Like that's not like a complete free market, you know what I mean? Like if they get to decide who lives and who dies, that's kind of strange to me.
Yep, I had a controversial take back in 2008 when all the banks failed. I said, they're not too big to fail. Let them all fail. Let the factories fail. Let the companies fail. And if you guys want to do something, do some, like, that is the only time where I'm certainly against it, but the only time I'll be like, whatever. Like, it's the less of two evils. Do direct stimulus to individuals, right? Like, if you're really worried that these companies failing are going to just dramatically screw up the economy, well, listen, allow the free market to thrive. New companies will come in, competition will happen, innovation will happen. They're not that, like, it's okay. Let them fail. Let things get, like, tossed around.
That's one of the little segues that I always think about when people talk about UBI, especially for Americans, stuff like that. Everyone thinks that if you give the people money that they're going to waste it, they're going to blow it, all that stuff. But I think the important part is we are living in a time that the country, like I believe it's like 40% of the U.S. has polled saying that they don't even trust their government. I mean, that's crazy. So with that, I mean, when you talk about UBI and stuff like that, I think it's just more of it should be a privilege to live in the U.S. It should be a right to you that they give you something to help you have a floor in order to go get the things that you want. And instead of working paycheck to paycheck, always trying to struggle for that. Like, I do believe that the American government should support its people, so it supports it back. And I don't think that it's going to cause people to be like, oh, well, they're just going to be lazy forever. I think it's going to inspire people to do better.
And here's the other problem with not allowing companies to fail and debt to be cleared from it, is that it prevents social mobility. So, we know the American dream is that, you can start a business, you can grow the business, like you too can get rich, like, yeah, blah, 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 it's the American dream. And, whether or not that's true anymore, that's another conversation entirely. But that can't happen when there's entrenched business interests, and that they're not allowed to go bankrupt, and so you can't compete against them, and so you can't start a business in that probably highly profitable industry that these entrenched interests are in.
And not to mention the amount of bonuses that went out from those that stimulus money to help them. Like the amount of bonuses that got paid for all failing at your job.
Well, no, I mean that's beside the point.
I just think that's just a very upsetting side point. that can even happen.
Unfortunately, that's the future you're looking at, where the big corporations are going to be in bed with big government. The two of them will scratch each other's backs, and
it'll only work for so long.
Government will guarantee a virtual monopoly in certain sectors, and welcome to your new communist hellscape.
Yeah, we're definitely in interesting times for sure, but I don't believe that relationship, as you just described, Jack, can last for very much longer.
I don't recall much about corporations in communist structures. Like maybe you know a different definition of communism than I do, but I mean, I feel like you're trying to just drag out your favorite hated term here, just flagellate it on it. But
no. Consider it neo-communism. All right.
Oh, so it's neo-communism now. Okay.
It's going to be a merger. You're going to see a merger of the corporations with the government, and the government's going to guarantee them or give a monopoly over certain aspects. And
I mean, if you want to use the word like corporatism or something like that, then by all means. But I mean, like you're taking this other term that means something completely different, and you're using it just so you can hate on it over here. I mean, does it make a lot of sense?
Well, it's kind of like statism, isn't it?
Like we get it. You hate communism, dude.
Again, communism as you may see it, maybe the more populist type of approach where, the common man is told that this is all becoming communal, but realistically, it's always a scam, So that's how they sell the average person on it. But realistically, behind the scenes, I think what you see with that type of political movement is very much a merger of corporate power with government power. So yeah, on the surface, they're going to bill it as, oh yeah, this is going to be all about providing an equitable economic ground for all our citizens. Realistically, it's going to be more of the same: corporate corruption, merging with government. So that's and I think we're seeing that unfold right now. Where you're looking at small and medium business
really,
getting
all of
leveled.
This is happening under the auspices of capitalism. You know that, right? And now, like, don't get me wrong. I definitely think it's obviously not free market capitalism, but I mean, you're still trotting out this. It's a scapegoat. Like, sorry, dude. Like all this statism, corporatism stuff is happening like under the umbrella of capitalism. But you're trying to beat up socialism and communism over here. Like,
yeah, because the next stage is going to unfurl. It's going to unfurl under the banner of socialism and equity. And meanwhile, it's literally just going to be another tier of corruption. So that's why I'm very careful for, ever endorsing any kind of socialist scheme, because realistically, it's just going to be more of the same corruption. And we're seeing that right now, I think, unfolding between COVID and the general economic meltdown. You're seeing small and medium-sized businesses get wiped out. And in the end, you're going to have...
Hitler 2.0.
retailers like Walmart and Amazon are going to be the only ones left, and they're going to end up guaranteeing every citizen some kind of UBI credit that gets you your weekly allotment of groceries at the local Walmart, right?
Congratulations, America. We guarantee everyone a job at Target if you want one.
Yeah, precisely, and everybody will guarantee their allotment of groceries or their $1,000 worth of Amazon credits a month or whatever. And I think there'll be generally a lot of support for something like that. But in the process, you're going to see most of the smaller business get wiped out and virtual monopolies granted to the biggest businesses in the land right now.
Yeah, well, I mean, that is kind of one of the symptoms of the system that we run, because we allow things to get so big that they can just wait everyone else out.
Oh, well, that's what happens when government gets really, really big, and socialism and communism is only going to make it that much bigger, guys.
Well, I mean, it would be good if the government were using some of that power that it has to break up the companies into, more competitive vehicles, but that is obviously not what they do.
Yeah, but if you look at throughout time, every single time a monopoly has been split up, they become even stronger.
Well, I mean, you say that like we have thousands of years of data, but I mean,
Well, so far
we have like less than 100 years of like corporate entities of these sizes that we've been like having to really break up. It's like we started doing it in the early 1900s with Standard Oil, and what were some of the other big early trusts or monopolies?
Standard Oil, I believe the railroad.
That's right. The railroads got broken up.
Yeah.
Pacific Railroad.
Yeah.
Mm-hmm.
It was just the big monsters.
Yeah, there was
at
Ma
the
Bell
time.
in the 60s.
Yeah. But I mean, to
Which
that,
is back, by the way.
I understand that we don't have that much data on it, but that still doesn't take away that we should learn from history. Why try to do the same thing if we've already done it?
Well, I mean, just it sounds like you're saying to me, it's like why clean a room if the room is just going to get dirty again?
No, that's not what I'm saying. It's more of a thought of, I don't know what the right answer is.
Oh, interesting. Someone brought up wrong. Our founders battled the King's multi-globalist corporations. So I think you must be talking about like the East Indies companies and stuff
East
like
India
that.
Trading Company.
Yeah, well, those were the first big corporations. Did those get broken up?
I don't want to speak out of turn because I do not know.
You gonna help us out, Justin?
Sorry, I was looking into this. There is an I don't want to say an issue, but I need to fix. I need to do something with our TradingView public indicators. They're not currently available for people that want to add them to their charts. I'll be taking a closer look at this after the show, and I'll be fixing it. So thank you, S180XT, for bringing my attention to that. I highly appreciate that.
You know what? Yesterday, Boundary Boys came to me and he said that like there was free indicators that you can get access to. Like I thought he was asking access for the premium indicators, but clearly he knew something that I didn't.
Yeah.
Sorry about that, man. Shout out.
Let's see here. Yeah, you guys got way into the weeds with it. Give me an update. Buy Bitcoin.
Buy Bitcoin.
Bitcoin fixes this.
Yeah, there's not easy answers for a lot of what you guys are talking about, right? Because eventually you kind of get, no offense, but this is like my big complaint about intellectuals on Twitter, right? Or intellectual debate. Eventually, with 99, I don't want to do too much mischaracterization, but like 99% of individuals, right, are just going to pick, like the political or emotional affiliation that best conscribes with their values. And for a lot of people, that changes over time, obviously. Myself personally, I was fairly liberal when I was young, even like some would say left leaning. And then as I kind of grew older, I became more conservative, which has now led me down another road of crypto anarchy. But I mean, I'm not a purist of that philosophy. And I know this because I continually get reminded of it by people who are more pure than me on social media, right? I do have some conservative views on some topics. I have some liberal views on some topics. So it's hard for me to kind of get away from the idea of, representative democracy, or some way in which I can push my agenda or vote for my agenda and attempt to vote people in. I kind of I think that the American model of gridlock is good. But when we get into either platform for either side, we talk about like issues. If we can get either side of the aisle here, and I don't really like this like left-right narrative, that's not really what I mean, but like seems you guys disagree on some issues. If we do agree on what the issue is, the solution kind of tends to be like, well, it might just work out somehow if the rest of the world adopted my mindset. You know, I hear that as an argument against libertarianism, right? For example, like, you know, like, oh God, the Rhodes argument, a libertarian's like most mortal enemy. But you know, I do see it. Like, you know, if you talk to a lot of people that kind of claim the libertarian tag, you're like, okay, well, how will this work? Well, it'll just work because, you know, a privatized defense system that's self-funded will be more efficient, and there'll be decentralized alternatives, which, granted, like, sounds like a good solution. But that argument could be interpreted as it might just work out somehow, right? Like if the rest of, you know, like if more people just adopted these values, it'll just work out somehow. And I see that equally like over on the left, like, okay, well, how is socialism going to like solve these problems, right? Well, it like this, and this. And ultimately that comes down to, well, if everybody was more socialist, it would just work out somehow. The thing that like worries me a little bit, and why I lean more toward the libertarianism and crypto anarchy on this certainly is, because historically, socialism and communism have a historical track record throughout the 19th century of and the 20th century of violently pushing that agenda on people and nations. So, you know, I for me anyways, I think it's as simple as that. This, like, I'm staunchly against communism. I'm staunchly against a lot of socialist concepts. I think that in a lot of cases their heart's in the right place, but I very rarely find a policy decision or a social system that socialists propose that I'm comfortable with. If I see one that I agree with and that I think works, I'll go for it. But I think the 20th century, all you have to do is really like look at the body count of communism in the 20th century, and that kind of ends the argument for me. And I know that that's slightly ignorant, because a valid argument to that would be, well, look, dude, like, you know, ideologies change and evolve.
Capitalism doesn't have a body count.
I don't think you can compare the gulags of the Soviet Union and deaths caused by capitalism and free market economies. I don't think you can.
Let's not forget that capitalism does work on some level of consent between different parties. So I think that's a substantial difference. So if you want to compare body counts, I mean, in just raw numbers, it's not even comparable.
You wouldn't even be able to get that data because you wouldn't be able to classify what a death from democracy was.
Well, no, I mean, it's a valid point that he brings up. Like, certainly there is lots of, particularly to like third world countries, that we could, like, you know, quote unquote, and this is a common narrative, right? Like, third world countries are taken advantage of by like larger, like, corporate powers. So the problem with that is that I don't think that really has anything to do with political structure. I think that's just a facet of what we see, because we see communist countries equally do that. We see socialist countries equally do that when they get the chance. When you have the chance to invade a nation, you do. And you know,
I can level that same argument against your argument about socialism and be like, well, these cycles, that's just, you know, part of human nature. These other political constructs, they have similar things going on. So you can't really hold that against socialism and communism.
Right. And I'm not trying to, but what I am holding against them is that in capitalist countries, you don't see them line people up and execute them. And it's that simple, man, in my opinion. You don't see
them do that. They do it
right, right. You don't see it, right? But communists do. They line people up and execute them if they don't toe the line. And there's a wealth of historical evidence from the 20th century to point to this. It's not hidden; it's there, and that, to me, makes that political ideology more, let's say, morally evil than one in which we at least have to hide the bad things.
9/11,
in my opinion.
I mean, it's certainly something to consider, that to incorporate this egalitarian utopia that, you know, the far left, you know, advocates for, requires a lot of bloodshed. That's undisputable. You know, I understand that the path to hell is paved in good intentions. It's still, you know, it's undeniable that, you know, in order to really level the playing field, as people suggest, in order to, you know, again, it is a class struggle. It's very much an ideology based around, divide and conquer through maybe a class, the lens of class, of different societal classes. Again, you know, in order to really get what you want, this utopian vision of human society, unfortunately requires stepping over a lot of bodies along the way. And, unfortunately, communists have a habit of justifying it, saying that these people are somehow immoral or evil for wanting to protect private property, protect the status quo. But it's the fundamental truth of it. You're gonna require mowing down a lot of people to, quote unquote, fix the world.
I don't have any, and I guess I don't have a problem with, I think we all want a more just and equitable and fair country. And, I have to believe, like, listen, I know that a lot of individuals who eventually, when they, right around my age, right? Our age, we're all about the same age here. Around the 30s, you tend to get really polarized, right? And this kind of starts the like grumpy old man path to grumpy old man. You know what I mean? Where you're just like, this is the way I believe. Get off my lawn type thing, right? And I certainly see myself headed that way eventually. I'm trying to remain open-minded to be like, listen, there's got to be a freaking way. There just has to be, right? There's got to be a way that we can all figure this out at some point.
Back to that whole bullish on humanity thing.
Yeah, but with a limit order.
Yeah. A resting limit order, in case I want to pull that shit.
So, I like, for example, I've been largely silent on current events. I don't have a strong opinion on them. I really don't know what to say. There's no magical wand that can be waved to fix people's problems and complaints. And this is like people's big critique about the American political system, and is one of the things I quite like about the American political system, right? Like, it's really hard to push through change in America. And that was intentional. That's not an accident. That's intentional. Like, if you go back and read the,
yeah, but I believe that can be a double-edged sword as well.
Oh man, I'm really testing my knowledge, or not testing my knowledge, but testing my the Federalist Papers. If you read the Federalist Papers, they straight up talk about that America's system of representative democracy was explicitly set up in such a way to prevent any kind of tyrant, but also like flash in the pan, immediate social issue that kind of consumes the narrative of either the ruling class or the lower class from changing policy in a drastic way.
Checks and balances.
And this is why I kind of agree with George Carlin on this, right? Like, George Carlin's got a great skit on this where he talks about, he's like, every 4 years, you get this dog and pony show, and every politician comes in and says, when I get elected, I'm going to change this, and this, and everything's going to be awesome. No, they're not. Like, the entire system is set up against them to do that. The entire system is set up for them to come in and change anything. And then he goes on to say, so every 4 years, I stay home, which gives me every right to complain. He says, some people say that if you don't vote, you have no right to complain. He's like, I don't agree with that. Because if I stay home and I don't vote and I don't like the way things are and I didn't take part and I have to deal with your problem for the politicians that you voted in, I get every right to complain. I agree with him on that. So some people strongly disagree with that. Some people think that voting is very important, but I don't know. I honestly,
I would definitely say when, as we'll probably say more and more often, when I was younger, I definitely thought, like, if you don't vote, then you don't have a right to complain. But I totally understand why there's plenty of people who wouldn't want to vote. I mean, unless you're the type of person that has, I guess these days, more extreme views on one side or another, it's kind of hard to find a political party that either that really expresses what you believe.
And I think this has something to do with technology.
Yeah, it's kind of really failing everybody right now. It's either you're polarized into these two extremes, or you've got nothing.
Because nowadays there's so much more information out there. There's so much more access to stuff, so people actually can have different point of views on stuff. And back in the day, when it was just kind of you watch TV to see what the people running for, you don't have all the access that you do today. So now let's create just a bunch of sub fractures of each group to where no one's going to get along with anyone.
You talk like people actually use the internet to learn things, and that's not my experience.
No. It's not about whether they're using it to learn things. They are creating ideas in their own mind from seeing it, whether they like that or not. That's the whole big important thing about media, and why if you have someone that's trying to do something with ill intent through the media, I mean, you can do some damage.
I mean, the
Sure.
two-party
Yeah,
system in the
Rupert Murdoch.
U.S. is, I think, more polarized than ever before, and I think for the before, I think there was still a sense of bipartisanship where people realized they had to reach across the aisle and make concessions and kind of find a happier medium, maybe because again people weren't as polarized, the political system wasn't as polarized, and we could maybe find a happy medium politically. But now things are so extremely polarized. I think the media probably plays into this right now. We are becoming kind of more unicultural or unipolitical. They're really especially in academia, you'd say, or in media circles, there really isn't much room to debate right-wing talking points. Things are really becoming monocultural. And I think the push is super evident that we're heading towards some kind of socialist, communist restructuring of society. It's undeniable. And no, it's not going to be a fair one where there's any actual equity, any drive toward equity in the process. It's just going to be like one guard that remains somewhat accountable now, replaced with another authoritarian guard, this one likely less accountable. But of course they're going to push the idea that we're making everything better for everyone's more equitable in their misery. This is the way to go. But realistically, I think we're just going to take a few steps backward. But of course, like many other communist revolutions of the past, it's usually foisted on the public using a duped public.
Bringing this back to Bitcoin for a little bit, what I find interesting, one of the reasons I love Bitcoin so much is, for me, everything comes back to economics, right? And this is all like late stage empire stuff that we always see when currency is debased. Almost always there is this is the point that I didn't get to complete earlier when we were talking about stocks. There's always this massive wealth transfer from the lower class to the upper class, from those who have, those who don't. It doesn't really matter what, and this is something that I find a little ridiculous. Like, I find I disagree inherently with a lot of the fundamental talking points of like socialism or communism, absolutely. But I also find myself like looking at some of the arguments that conservatives make about the fact that oh, hold on a sec, I took this down. I also find myself disagreeing with some of the talking points of conservatives who say that, well, it's all personal responsibility and there's no inherent inefficiencies in the system. That's completely wrong. Like, all you have to do is study the history of economics. It is, regardless of what political system you get in there, it is a process of transferring wealth from the lower class of the economy, the actual productive members of society, to the financial sector, right? That's at least how it's become over the last 100 years. And it's not good. That destabilizes. That has its own destabilizing effects. The debasement of currency exacerbates this, and it's really the debasement of currency and the loss of faith in a nation's currency that has stimulated all the massive movements. And we see all of this kind of political unrest. I think a lot of this unrest just maybe is, a lot of it's probably inherent, right? Because a lot of it's just different flavors and different times. We've had these arguments probably in different facets for the last several thousand years of human evolution. So I don't know if there's really any solutions, any fixes that are prevalent. I think that human biology and the way that humans form societies, we're on a very long time scale evolution wise. It takes millions of years, hundreds of thousands of years. So we have technology now. So who knows what's going to happen with that? Of course, the most logical argument there is that artificial intelligence will replace us. This is a pretty popular narrative. So this is why I don't get too down into the weeds on the political issues. But with the economic crisis that's currently happening right now, as we're seeing this massive wealth transfer, and particularly very sickening if we're seeing retail traders being incentivized to buy into the asset class before it gets sold down, so wealthy investors can accumulate more currency and move those funds into hard money like gold, silver. This is kind of the first time in history where we are going to see, and I don't think it's going to really stop it, but this is the first time in history where we can really see individuals choose to be digitally sovereign by holding Bitcoin, because gold and silver is far easier to physically confiscate. You know, Bitcoin is very, very difficult to physically confiscate. You know, you can run around with a private key in your head and have a whole lot of wealth. You know, previously you're really tied down by having to lug around bags of gold and silver, which makes you a pretty easy target for the Gestapo. Like, stop that man! It looks like he's got a big burlap sack of silver. So this will be kind of interesting to see how this plays out over this kind of shift, because certainly we are shifting in the next decade or two to the dollar as a world reserve currency, as to the dollar standard, to some CBDC backed format, right? Whether that's kind of chaos and we go back to like really like, if you guys think you've seen floating currency rates, you guys haven't seen anything yet. If there's no reserve, there's no world reserve, that's going to make things very, very difficult. I'm certain that there will be some form of world reserve, whether that's the Chinese DCEP or the American digital dollar or whatever it happens to be. But certainly we're going to be shifting to a different currency standard. And, you know, one can only pray that we move to something that's backed by hard money. I feel that's unlikely given the way that the world is going, but it also depends on how hard the public pushes back on this current economic crisis. So anyways, with that being said, guys, it's time to pull the plug on this. We got to get going.
All right. Buy Bitcoin.
All right.
Back to work.
Have a good day, guys.
I got a lot more bottom feeder testing to do today, so.
All right. Awesome. Well, thank you guys for joining me. I will see you guys tomorrow.
Have a good one.
Cheers.
All right, good times. Thank you guys for all the conversation. Highly appreciated. Yeah, good stuff. Good stuff. Thank you guys so much for the support, for all the likes. This has been another episode of Breaking Bitcoin Market Update. We did cover a lot of news, fundamentals. We got into some topics that I think obviously are on everyone's mind. So I hope you guys felt stimulated by that conversation and it's gotten your brain juices flowing. So if you guys have any questions, comments, concerns, sarcastic remarks, or death threats, please leave them in the comment section down below. Make sure, if you haven't already, to subscribe to this channel on YouTube, hit that bell icon, and if you leave a like below today's video, we do highly appreciate that. If you're watching on DLive or Twitch, you can support us over there as well. You guys know how to do that. Thank you guys for all the support. I appreciate that. If you guys have links down in the description for anything you could possibly need. Of course, today's episode is brought to you by the Premium Trading Group. If you guys would like to sign up and begin building your own objective data-driven strategy and take advantage of all that we offer, please check us out at premium.crackingcryptocurrency.com. Links and much more down below. Make sure to stay tuned for tonight's, not tuned right now, but like later tonight. You know, if you got bell icon on, you'll know. When we put out a Breaking Bitcoin Bits, which will likely summarize the institutional investment Coinbase, or not the Fidelity institutional investment survey and story. So if you missed that, you can certainly catch that in the Breaking Bitcoin Bits tonight. It could be something else. You never know. It's completely random. That's why you got to subscribe. We will be back tomorrow at 12 p.m. Central Standard Time for another episode of Breaking Bitcoin Market Update. Make sure that you guys are excellent to one another out there. We are all in this together, and trade safely. Cheers, guys.